on the show to talk to us about their earnings. Hi, Anuj. Good to be speaking with you. Thank you so much for waiting by patiently. I wanted to begin by asking you about your growth rate going forward, because this quarter, of course, the growth rate has been moderate at 5%. But given the kind of strong SIP flows that we are witnessing, the strong traction in the markets and the participants, do you expect the rate of growth to accelerate from here on?
Hi, good morning, and thanks for having me on the show. So, as you've seen the results, we posted a solid quarter. Revenues grew 19% year on year. Profit at PAT level grew 21%. Most of this was on the back of mutual fund assets growing handsomely 22% year on year. And equity assets, which are the highest yield in that segment, grew about 31%. So, on the back of that, mutual fund revenues grew 15%. Our non-MF portfolio did very well, had a solid 59% year-on-year revenue growth, largely led by our KRA, payments, alternatives, and account aggregator businesses. So if you see in aggregate, our call to the market has been that we should be a solid 15-16% earning compounder. In the last quarter, of course, growth has been significant, so we grew earnings almost 21%. I think if mutual fund assets continue to grow ahead of past trajectory has been about 18%, but if they continue growing 21 to 22%, it's quite possible for us to continue posting 20% net earnings growth. Otherwise, the baseline of 15% growth is what we believe we should continue to achieve in the coming quarters.
Right, Mr. Kumar, good morning, and this is Vinny joining in the conversation as well. Mr. Kumar, I want to pick up on a point that you were highlighting also in terms of non-mutual fund portfolio that's been doing well, and you've made a lot of launches on that front as well. Currently, when I'm looking at the margins around that 44-45% mark, but do you think you could see the margins move upward now, given that there are more launches in the non-MF side portfolio as well, and could it reach that 47-48% mark in the next couple of years?
So historically, if you see, our EBITDA margins have gone up by about 1% every year in the last 5 years. Quarterly, we saw a growth of about 0.3%, 44.5 going to 44.8. What is significant is, like you pointed out, that our investments in non-MF businesses have happened in the last 2 to 3 years. They are now revenue accretive businesses. We are gaining share and we're building revenue. So it's quite possible that we will become slightly more financially efficient. And my guess is that taking a call on about 1% net margin growth every year is in the realm of what could happen. And that is how things have been in the last 4 to 5 years.
So that's pretty interesting to see. In fact, the SIP addition number is only becoming stronger with each passing day. Can you tell us, is there a sensitivity which you can share with us? If this number becomes stronger, say 20,000, 25,000 crore in a year, 2 year, how does this equity flow actually is sensitive? Your earnings are sensitive to this equity flow number.
You can think of it as a very direct correlation. Today, when you see the HNI segment of the market, they are spoiled for choices because there are various structured products, direct equity, F&O kind of things that they do. But the middle and the bottom of the pyramid is a strong believer in SIP. You would have seen that SIP collections, and these are monies hitting the AMC's bank every month, have crossed 17,000 crore. This number is growing on an average by 350 to 400 crore every month. Now, if you laid out this momentum for the next 1 year, if it continued to happen, you could see the 17 expand to 21, the 21 expand to about 25, 26. Again, in the realm of possibility, if I just extrapolate the past. So there's a very strong correlation. This is what equity net flows are really made of in the market. This is a large mass segment which continues to contribute to mutual fund assets, largely on the equity side. And there you would have seen that our growth rate has been 29% year on year, much ahead of the market. So we're very bullish on the trends. We think it's a foundational movement, and it is directly correlated to how assets are building out and how our earnings are growing.
Okay. We've seen your margins, hover in the 44-45% range. And the expectation is that as your non-mutual fund product offerings also go up, your margins will actually go in the direction of 48-49%. Is that a fair estimate?
So like I said, historically, we've grown margins by about 1% a year. I think from an extrapolation perspective, that can be taken as a reasonable way for things to happen, which means that could happen over the next 2 to 3 years.
So that's the latest coming in from the CAMS management. On that note, sir, we let you go. Appreciate you making time and speaking with us. So the growth is expected to improve from here on. Margins are